What's up, apes? My name is Tyler. Welcome back to the channel. So let's go over everything you guys need to know. The events that happened today with AMC stock, but mainly talk about this margin call situation, why we are getting ready for margin calls and a huge breakout based on a lot of factors. We are looking at the potential, a huge potential to see a gamma squeeze throughout the rest of this week and mainly for next week. So it is going to be very volatile the remaining of this week and next week, probably the next week after that. Given the catalyst, the news that did come out today, this is really changing the game for AMC stock. So we are going to talk about that, go over the Ortex data, everything that we do typically do, keep you guys informed of what is going on with AMC stock for today. So drop that like on the video, comment down below, let me know what you think about the catalyst and the news that did come out today. Put your tinfoil hats on if you guys do want to. Let me know your guys' raw opinions on this, as well as subscribe to the channel, turn on the notification bell, all of that good stuff. But let's get straight into this video. Let's first off just acknowledge where we sit on a technical basis. We are looking incredibly bullish. Nobody can deny this. The charts on a technical basis are signaling we are getting ready for a breakout. We are seeing a lot of resistance at about this $48 price point, even about $49. As soon as we break over 48, AMC really starts to struggle and starts to fight, leading me to believe after we do break out past 48, get a strong break above that, break out past 50, you're likely to see about $55 to $60 per share on AMC stock. That is where we did really consolidate for a long period of time. We've seen a lot of support at about $50 per share. But at that point, guys, you're going to see a lot of FOMO buyers, a lot of day traders that come in and buy the stock. Even hedge funds and institutions are continuing to buy AMC. We see this reflected day after day on the Fintel data. So it's not a question if we are going to see this rally, in my personal opinion. Keep in mind, I'm not a financial advisor, not a financial planner or your dad, so don't base any trades based off of what I say. Don't YOLO anything. Really do what you can for your own capital and for your own risk management. But nobody can deny how bullish we look, and inevitably we are going to see this breakout above $50, and then really the sky is the limit. But when it does come down to the margin call situation, as we do know, NSCC 005 was implemented on Friday. Now, typically, a lot of people, I should start with this, a lot of people were very confused why we didn't see a pop in AMC stock. This is not to say the accounts with the NSCC that do go into deficits are even short on AMC stock, but some of those accounts are short on AMC stock. If they cannot come up with the collateral or really just the extra money to fund their accounts to stay in all of their positions, the banks or hedge funds, institutions, whoever they are that do control these positions, really, market makers, brokers, banks, they're going to come in and forcefully liquidate on positions. My running theory is that these short positions in AMC are by far the riskiest positions in these portfolios, or these hedge funds and institutions portfolios, and they would be the first ones that would be liquidated. But you guys got to remember why we didn't see a pop on Friday is because, yes, that did go into effect on 10 a.m. on Friday, June 3rd. But typically for margin calls, you have in between about 2 and 5 days to fund your account and get it out of a deficit. But the hedgies, they probably have more pull with the brokers. So it's really on the table how long they would have to fund their accounts. If it's days, weeks, or months, who really does know? But eventually these margin calls are going to come out, by my calculations, about $10 billion worth, and that is off of a very conservative calculation. So it might be way higher than that. So you're likely to see some margin calls. But in and of that, not even talking about or acknowledging NSCC 005, a lot of these hedge funds, they're severely over leveraged on margin. Obviously, that is not a new thing to be hearing, but the FINRA data does have the margin, the total margin outstanding. About 90% of this, I would imagine, is held by hedge funds and institutions at $844 billion, $324 million. That is about double where we were at when the lows of 2020 did happen. So you've seen a lot of money, a lot of margin flow into the markets, and these short sellers on AMC, they have a lot of margin to stay in these positions because the implied volatility is very high with AMC. So if you're a broker potentially lending out these shares to be sold short, you're going to want more collateral because AMC has the potential to move a lot more. Now, we have went from about $30, really $28.91. That was just on August 5th. 1 month later, almost to the day, approaching $50 per share. That is a decline, if you're a short seller, of about 40 to 45%. 8%. And when you're using margin, your losses are compounded much, much faster than just using an all cash account. So these short sellers in AMC are severely over leveraged. They are looking at their short positions absolutely blowing up in their faces. Some of the smaller guys, I'm not talking about the Citadels or the large guys with hundreds of billions of dollars of assets under management. Of course, they're not going to get margin called until we do see the mother of all short squeeze. We're in the multi-$100 prices. That is where they will be forcefully liquidated and have to cover on their positions. That is what is going to give us those further legs up to thousands, multi-thousands, $100,000 million prices that we all know is coming. It's only a matter of time. But really, the small guys, those are the guys that are looking at the potential to be seeing margin calls when this next breakout does come. But the great thing about that, when the small guys get margin called, you see even more big guys come in and short the stock. That is why we're seeing the short interest percentage of free float continuously going up as the price of the stock does go up. You have to imagine that some of the small guys in AMC have took this last period to really cover on some of their positions. But like I said, you're seeing the mid-range liquidity guys and even the bigger guys come in and continue to short AMC. Short interest, like I said, at 19.04%. Current shares that are sold short of 97.39 million. Very large amounts categorized as extreme short interest. You're also getting a lot of other people starting to talk about AMC and the short squeeze yet again. We are going to crush the hedge fund. It is going to be a great thing. We ultimately saved the company, set ourselves up for this massive trade. So you guys should definitely feel some pride in that. But let's get into a little bit more of this data. And we're seeing the share utilization has actually went down just a little bit over the past 7 days, but you're seeing the free flow on loan over the past 7 days go up about 3.3%. So that is essentially telling you out of the free flow on loan, that is what percentage of the overall flow is out in people's brokerage accounts that has not actually been sold short yet or has been returned. In the meantime, these hedge funds, institutions that are taking these shares out on loan, they are paying an interest rate. The average cost to borrow is approaching 3%. The cost to borrow max at 8.29%. So it is not cheap to keep a large position of shares out on loan in your portfolio. If you're using, like I said, a large amount, millions or even hundreds of millions of dollars worth of shares, you're not going to keep it in your accounts for a very long period of time. So you're likely to see this free flow on loan be shorted into the market. So I would not be surprised, like we did see on Wednesday, to see about 2 to 3% of the flow of the total outstanding float be sold short into the markets on any one given day. That would lead to a very significant down day like we did see on Wednesday, down about 8%. Wouldn't be surprising if we're down about 8 to 10% in one day this week. Probably, if I were to imagine, it's probably going to be tomorrow, because Thursdays are typically very red days where the hedge funds, institutions short a lot of stock into the markets, use a lot of their manipulative strategies, and really try to force a lot of the calls out of the money. But you're likely to see the short interest, like I said, go up about 2% in my personal opinion when these shares are shorted into the market. And that would put us at about a 21% short interest. And that is incredibly, insanely high. Now let's move into this gamma squeeze situation that is unfolding. So we are looking at, by this Friday, we have 49,000 calls that are already in the money. Out of the money calls at 141,258. So a lot of people every single week, they pile into the weekly. So the contracts that expire on Friday. Typically Monday, Tuesday, and Wednesdays, you see a lot of activity on the expiration date that is on the next following 2 days after that, right, on Friday. And what happens after that, you see a lot of people sell out coming on Friday, and they do roll a lot of this open interest over into the next expiration date. And that is really where we're looking at the large chance of seeing a huge gamma squeeze. We're already seeing 147,340 calls that are in the money, 272,644 that are out of the money. That does control about 40 million shares that would have to be bought if all of these contracts did run into the money. Keep in mind, some of this open interest, about 80,000 of this open interest is held at the last strike on the chain. So you're not really going to see all of this open interest go into the money, but you're already seeing a large amount in the money. And a lot of this open interest is held just out of the money at the 50, in between the 50 and the $60 strike. Some of that obviously at the 70 and the $80 strikes as well. So you're looking at the huge potential to see a gamma squeeze. It is going to be very exciting, but very volatile at the same time. And prepare your guys' self for big moves to the upside, big moves to the potential downside. But let's briefly wrap this video up by talking about what did happen today. Obviously, the AMC and GameStop rumored partnership. This is a huge step in the right direction for AMC and GameStop, really using this hype and momentum in both of these stocks to come together and make a great thing. We can only speculate what this actual partnership is, but the verbiage that was used does suggest they have actually agreed on a partnership, but they are likely just ironing out the last details of this partnership, getting ready to announce it to the overall public. That is probably why we did sell off a little bit towards the end of the day after we did see that big pop, because this has not been confirmed and it is essentially still a very strong rumor. That's how I would put it. But eventually we're going to get some update on this. This is going to be confirmed 100% in my personal opinion. That is going to cause a lot of hype into the stock. You're going to see, based off of this alone, I do think a couple percentage points of the overall float that is sold short to probably be covered in a very short amount of time, but to see the larger guys with more liquidity come in and immediately short AMC stock right after these shares are covered. So that is the situation on that. The other situation is AMC is doing something they have never done before, and that is advertising on TV. They said they're going to spend $25 million on a multimedia campaign featuring Academy Award winner Nicole Kidman. Says traditionally movie theater owners have relied on studios to promote films and drive moviegoers to their local cinemas. CEO Adam Aron said AMC will no longer rely on, in quotes, what's always worked before, noting that the COVID pandemic has pushed the industry into, in quotes, uncharted waters. So this should cause a lot of revenue to go to AMC, and this is not a downside whatsoever. $25 million compared to the $1.8 billion in cash that they do have is a drop in the bucket, and overall, I think it is a great catalyst for AMC stock. So let's get this popping. Let's end this week out on a very strong positive note. No matter what happens, I do think a breakout is coming. If not, like I said, September 17th, that monthly options expiration date is going to cause this breakout to the upside, and margin calls 100% in my personal opinion. But let's get it. Let's get this money. This is a time game, and I am in this as long as it takes for the AMC, mother of all short squeezes. So drop that like on the video, comment down below. Let me know what you think this potential partnership is with AMC and GameStop. Put on your tinfoil hats. Let me know what you guys think. I would love to hear from you guys. Subscribe to the channel, turn on that notification bell, all that good stuff. Check out the 4 links linked down below in the description. There is a free AMC Discord chat. There is a link for the buy and sell alerts. That is a program where you guys will be notified in real time every time a trade is bought or sold in stock, options, or crypto, whether it is a long-term investment, a day trade, a swing trade, or, you know, a longer-term investment in options. We do it all, and that is really cheap. So a lot of people are able to be a part of that and really grow their knowledge and expand their potential for financial future in the near-term future. And who doesn't like that? So those are the 2 links that you guys really definitely need to check out. There's also 2 other links for free stock. There's the link for public. You get up to $70 in your choice free stock. No need to link a bank account or deposit a single dollar to receive your free stock. Also a link for Webull. So with all that being said, guys, you guys enjoy the rest of your night. I will see you in the next video.